Okay, so consider the following: whatever I say now is strictly my own thoughts, because in the end, it's the DAO that controls that the ability to sort of direct incentives towards V2. The DAO sort of everybody governance voted and decided to support and integrate V2 onto kind of the reference design front end, but there's a lot more that could be done to sort of stimulate that. Once I think a lot of the technical hurdles in terms of chain links, full integration, and just being comfortable that the protocol is run for long enough.
Okay, quick disclaimer before we get started. The Blockmates podcast is for entertainment and informational purposes only and does not constitute financial advice. The information and opinions expressed on the podcast are those of the host and guests and do not necessarily reflect the views of Blockmates or its affiliates. Listeners are encouraged to do their own research and consult with a financial advisor before making any investment decisions. Blockmates and its affiliates are not liable for any losses or damages incurred as a result of the reliance on the information or opinions expressed on this podcast. One more ask before the episode gets started. There's around 60% of people who regularly watch and listen into all these streams and podcasts and things we do. We don't ask anything from you guys. All we want is just to hit the subscribe button, maybe the like button as well, or if you're on Spotify, just there's a little follow button there that you can take 2 seconds to press. It helps us out massively. It allows us just to get bigger and better guests on, so you guys get a better listening experience. So if you could do that, that'd be great. And if anyone wants to to tap into some of the other research we do across blockmates.com, that's also readily available for everyone. And also the newsletter subscription is below. Again, all for free. Don't want anything from you. Just a way for us to kind of build off the back of what we're trying to do here. So thanks a lot. And subscribe button's below if you're looking for it. Okay, welcome back, everyone. So we've dragged Coinflip back in for the second edition of Blockmates and a GMX podcast, because these guys have got an awful lot happening at the minute. So Coinflip, thank you for taking time out of your extremely hectic and busy schedule to join me and talk about what's happening on V2.
Really excited. Always great when we get a chance to chat.
Yeah, absolutely. I mean, I think the first one we did was probably well over a year ago now, and we're up to kind of 200 episodes since then. So a lot happening on our side, but much more happening over the GMX camp. What the hell has the last 18 months been like for you guys? Everyone seemed like they were in the depths of despair, and you guys just kind of coasted through it. What was happening internally in the camp?
Oh goodness. Well, I mean, no shortage of ups and downs, as with everybody else in the market. I think we were fortunate that I think during a period where, as you said, there was a lot of uncertainty in the market. Our product had sort of, and the protocol had really started to mature and started to gain traction, and really the use case came into focus, which was great. I mean, the fact that people could be able to have something like a perpetual or a leverage trading platform that they could trade on, and where they had complete visibility of the assets of the protocol, the verifiability, the assurance that a trade could be settled because those assets were available on chain. It removed a lot of the trust assumptions that people would have to have made to trade in perps within centralized exchanges, which was effectively the only place you could trade. So I think that was something that really, it was always a core part of the thesis, but it really came into focus during the last let's say 12 months. Yeah, let's say I think the world really started to get crazy about a year ago from where we are sitting right now, and I think that definitely was something that that I don't want to say helped, because that situation for the industry, but it definitely helped to make the case for what both GMX and other per platforms and DeFi in general was doing. The fact that if solvency was there because the assets were there, what was being traded was available, I think that was hugely impactful. And then just again, maybe from our standpoint, it was a matter of being really focused on building out a very broad base of integrations, partners, support within the ecosystem on Arbitrum and Avalanche, which again just allowed us to sort of leverage everybody else's growth as well, help them to grow, do so in a way that was what do they say? The whole is greater than the sum of the parts, and start to deliver an experience collectively on chain. that was starting to become compelling.
Yeah, I mean, there was just so many stars aligned, but it was kind of, in my opinion, it was always going to happen. Someone as like a big supporter watching from the outside in, you kind of slowly started to see these pieces fit together, whether that was from a product perspective, whether it was kind of people looking at fundamentals of a product, whether that was seeing the actual yield generated for that. That's obviously a big factor for some people. And then, like, I think we spoke about it before, the amount of products and projects that came and built on top of or adjacent or kind of using GMX or GLP products. How the hell did you manage that? Because from the outside looking in, it was like, oh my God, there's another one. There's another one. And then there's another one. I was like, these guys are going to need some kind of customer support desk to get all this over the line.
Well, it was a really interesting discussion where I'll just use this example. I mean, we've been very blessed that GMX has had both a wonderful community and a deeply involved community, and a very small set of contributors who have been really focused. So there is really no bureaucracy within GMX that way. Things are very flat, and that is kind of that is the inspiration of what DAOs can do. And for us, there was this interesting inflection point where we went from, okay, and even now, if anybody wants to work with us, one of us will try to jump on, a Twitter space, or I guess an X space now, or an AMA on a Discord and wherever, and really engage with any community that was looking at building, because we also understood that the lifeblood of the protocol was having uses. People who need yield, being able to come in and being able to mint into GLP. There's a use case for their protocol in terms of where they may be looking at yield. There are people who need to be able to hedge or trade or be able to do these transactions on chain, copy trading, whatever it might be. How do we work with them to help drive that demand? And so we were always very open to making sure that we were there to show people that we were committed to making sure the protocol was as open and permissionless as possible, so that anybody could build, and encourage them to do so. And slowly we got to that point where, at first, there was a lot of maybe technical hand-holding. How do you do an integration? And people haven't dealt with it. It's a novel set of, new primitive contracts. To then suddenly, getting to a point sometime, I want to say early this year, where we were starting to see, announcements for protocols that had built on top of us who'd never spoken to anybody, either from the ecosystem side or let's say the dev side. And it was that exciting moment where it really showed the power of DeFi and these public blockchains that we are all building on. That you don't need to ask there isn't anybody you can ask for at GMX for permission, because there is no permission required. If you have something quality you want to build, you can build on top of GMX. No different than a Uniswap or anyone else. But it definitely did guide a lot of our thinking about the V2 architecture of how do we make sure that we support all the sort of pieces of the ecosystem. So how do you support demand generators through referrals and trading rebates, which were created as part of V1, but have been natively integrated into V2? How do we look at people who are now going to be operating decentralized front ends? Hopefully no longer will just the template GMX front end that like the reference design that we've put out be what people use. Hopefully there'll be a wide variety of experiences. How do we make sure that happens and it works well for mobile wallets and everybody else as they build and can build up utilizing this liquidity? How do we make sure that liquidity providers have, and especially protocols who are hopefully going to be building and want exposure to certain assets and markets will be able to do that in a more granular fashion? How do we create these opportunities for people to create managed products, which I think GLP was a very interesting managed product, in the sense that it was all obviously algorithmically managed, but it was something very simple you could provide liquidity for. But how can we work with people building a range of products that can do that for a different, multiple different sets of users with different configurations? akin to, the way that an ETF or a mutual fund might operate and have different ones, because it's not like there's one fund for everyone. So, I think, this ecosystem of builders were so core to GMX's success, and they were very much kept in mind with the approach for looking at how to build out V2.
Yeah, it was truly like amazing to see. One, everyone should kind of rally around it, and it felt like everyone was completely rooting for GMX to succeed, and probably still are to that point. But what was the main kind of learnings and thoughts internally around what you picked up from V1 that you guys had kind of wanted to make sure you absolutely nailed, or even kind of push the envelope on it in V2? I mean, I've got a few points here, but I'd love to hear if there was any kind of like immediate things that you guys were setting out to kind of resolve or even increase or make better in V2.
Well, I think I'll go back to first principles. If I go back to what was GMX trying to solve, or what was things like XFix or Gambit or any of these protocols that sort of came together and created the GMX DAO, what were they all trying to solve? And the North Star has been in on-chain markets, and I think if I actually look at GLP, what was really, I was going to use the word brilliant, but I'm not trying to it's not being boastful, but it's saying what was wonderful about GLP was that in theory, even a small amount of capital could help to create a very efficient market on chain for the assets that were within GLP, which is the reason that while GMX and GLP have grown quite a bit, there have been countless forks across the ecosystem of GLP. And even if they've had 5 million, 10 million, they've been able to create, robust trading environments on those chains where they deployed. Because it effectively was a protocol built saying, how do we handle this issue of liquidity fragmentation, but still make sure that we can create these efficient markets. And it's obviously a wonder. It's something wonderful that the protocol has gained so much attention and attracted so much liquidity that now you start to say, oh, well, how do you create efficient markets with a lot of liquidity? And how do you now address the next opportunity, which is that, hey, listen, we're starting to get to a point where, if GLP were to run unhindered, people maybe can be making trades that are not exactly appropriate for liquidity providers given the overall risk profile. So we start to look at those issues, and you start to say, well, how do you leverage the efficiencies that GLP brought to the market in terms of Oracle pricing, helping to reduce things like impairment loss for liquidity providers, and basically not being forced to sort of shed value unnecessarily through arbitrage, and start to say, well, how can we do that? And to do that, we need better data, and that sort of led to the partnership with Chainlink and the development of these new oracles, which have much more robust data delivered to us with extremely low latency. It was literally about looking and saying, well, what is the infrastructure you need to create this now big, liquid, efficient market, and find the right partners to build that infrastructure and build out a set of contracts that can leverage that infrastructure, or I should say, can additionally leverage that additional information if you want to then be able to make these new markets. So it really has continued to be that our North Star. We want to bring efficient markets on chain for a wide variety of assets. Crypto assets are still at this moment the most traded assets, but that in theory is any asset. And how can we bring that transparency of execution, that transparency of liquidity, and that trading experience, which I think hopefully rewards all participants, meaning traders, liquidity providers, market makers, or anybody else who helps to balance out our markets. How do we do that? And that's where we are, creating these efficient on-chain markets. And sorry, I know that was very repetitive, but
no, that was great. No, I kind of assumed that's you guys are just had that idea in mind. You're always working towards the same vision, so it's kind of good to hear that you kind of back that thought up. So with people who might be listening who are familiar with GLP, how is liquidity provision gonna going to change on V2. I've had a look. I've had a play around. I'm really impressed. But for people who are, they've used GLP in the past, they've been providing liquidity on V1. What's going to change in V2?
Well, so what V2 will allow is for you to target your liquidity. It'll allow you to target your liquidity in the sense that you'll be able to target the assets that you're posting as collateral and the markets that they are supporting. So, for example, you can take a position that is only effectively ETH and say USDC to back an ETH market. You also would be able to take those same assets and back maybe an XRP market, an LTC market. If you wanted to trade in a market like Link, people and Link has been Chainlink obviously has been a wonderful partner, and the Link Marines are already starting to very actively provide liquidity into a Link USDC market. They're no longer constrained by the need to a certain allocation within GLP to then drive trading activity in those tokens. You're able to be a targeted and focused liquidity provider, but do so in a way that we hope, and I can say that, or we've planned it in a way that we think that liquidity providers will be far better compensated for the risk that they're taking in comparison to sort of non-Oracle based liquidity provision within let's say a swap DEXs. So I think it definitely gives you a lot more granular control. Now, I will say that extra granular control is not going to be for everyone because there was a certain elegance to the simplicity of GLP being a multi-asset pool. So I definitely think you will see products come out from the ecosystem where people help people to manage that and give them sort of, risk optimized or yield optimized or, capital preservation optimized vaults that provide liquidity into multiple markets. I think you're going to see that play out. And I think you'll see a lot of people simply focus their liquidity onto the big liquid markets, namely USDC for an ETH market or a BTC market, which are both the assets that the vast majority of people want and the biggest amount of volume tends to drive through as well.
I'm so glad you just said that because I was literally about to ask, do you think there's going to be any, I don't know what the structure of the vault would be, probably like a 4626 kind of vault where people might go and not completely replicate, but gain exposure to all of the GM pools by just being able to deposit one asset in, and then that got on the back end that's depositing across in different weights across. So I'm glad you kind of brought that up because that's immediately where my mind went. I can imagine that's going to quickly come onto the market.
We've definitely seen many protocols already engage with us looking to build products like this, and so it's definitely something that I would expect you will see happen. We're also we'll be going to, we're also encouraging people and even looking at from our marketing budget to co-incentivize audits and any sort of external costs so that people can very quickly come to market with a high quality, safe, secure product that can provide those opportunities. So it's something that we see as developing. And as I said, I think you'll see a wide range. I mean, I think you'll have some people who will do a very passive setup with a targeted number of vaults. I think we've seen people who are talking about building, what's the right term here, more actively managed vaults where based on upticks in volume and activity and markets with a greater yield opportunity will start to allocate more and more capital from one GM token to another. So they're effectively a yield optimization or a yield maximization vault. You're always taking a certain level of risk by being a liquidity provider, but you have the ability to choose which markets you're most comfortable with and which markets, depending on their volume, if you think it's more attractive to be in. And I think there will be good managers who will be able to build systems to outsource that and more efficiently allocate capital. Because I think one of the opportunities by having a bit of a trade-off, giving up some of the capital efficiency of what GLP did in terms of just making it very simple to have this wide range of assets that you can easily trade, is the fact that you now will have, I think, a lot more targeted growth without it being the GMX. The DAO doesn't need to vote to change weights for assets. The market itself can help to sort of drive that.
Yeah, yeah, that makes a lot of sense. So obviously, there's been a couple of additional assets listed. So if you think about like kind of if someone's coming in completely cold here, what would if we use like an asset like we just use ETH as the most basic example. So previously on V1, they came and they could have deposited ETH into GLP, or they could have deposited any asset that's in that kind of basket of assets, and then they kind of gain exposure to GLP that way. But if they want to kind of just come and provide liquidity to the ETH USD market, effectively the user journey from my perspective, correct me if I'm wrong, is just head over to the kind of earn tab, click over to the ETH USD market, and then click buy into the ETH USD GM pools. Like, have I missed anything off there?
Yeah, and you have the option to deposit either one of the two assets that back that market, or both of the assets, depending on what you'd like to into that market, to then mint in and become a liquidity provider into that market.
Yeah, sweet. So the next bit, what might kind of throw people off, but I think it's quite easily explained. I'd kind of love to hear you kind of explain it in a much better way that I ever will be able to. So with the likes of some of the synthetic pairs, so even if it's down to like a DOGE or a Litecoin or something that isn't inherently you're depositing those native assets into the pool. So how does the underlying work then when it's kind of reflecting a different token in that market?
Yeah. So the way to think about this is a few things. So in terms of liquidity provision, in the event that native token is not available in some sort of a bridged fashion that works effectively. So I'll use an example. On Arbitrum, Uni can be bridged very easily from ETH mainnet. It's been done so in a certain level of capacity, and it's a lot easier for us to just support the native asset. But if I take an asset like XRP, where there is really no native or bridged version of the token available, on ETH mainnet or Arbitrum, practically speaking, those markets are effectively backed by a mixture of assets, and they could be backed by any one asset in theory. Like we could have made a market based only on, say, USDC. But what we've tried to do is we've tried to take these pools and provide and have them backed by a mixture of assets. So effectively, one being another volatile asset that has a certain correlation, ETH in most cases being that primary asset, and then also stable. Now, what that does is it means that as a liquidity provider, even if you have exposure to a currency market, or a token trading market that is different than your collateral, there is at least some level of correlation, which definitely helps to mute the impact of any sort of lopsided open interest in those markets. And the markets have really been designed with obviously a lot of mechanisms to help balance those markets in terms of funding rate incentives and other ways to get other people to come in and trade in those markets and balance those markets in terms of open interest exposure. But in the event that there is sort of extreme moves, there's also mechanisms around auto deleveraging and other ways to sort of help to force the markets back into a nice stable state, so that the liquidity providers are both helping to create active liquid markets, but are also not exposed to undue risk from the fact that you are creating and backing markets with a different backing effectively. In some ways, it's not that dissimilar to if you think about the experience that if you're somebody who may have traded on, say, a BitMEX, where all backing was using BTC, but trading was happening in effectively other currencies and denominations.
Mm-hmm. Mm-hmm. So what does that look like on the trader side then? So if it was like someone's wanting to trade Doge, they're coming onto GMX V2, assets that they can put down as collateral, what would be available for them there? Can they trade with ETH and or USDC? And they're obviously getting exposure to the underlying if they deposit ETH and they start trading there as well.
Exactly correct. So you have the option of which of those two backing tokens you want to hold your collateral in, and you hold your collateral perspective of what else may be happening on your trading on the trading position that you may have opened. So if you've deposited in stables, you continue to maintain your collateral in stables. If you deposited in ETH, you continue to maintain your collateral and exposure to your underlying ETH movements. And then, it's just a matter of settlement of your P&L against your collateral, which will again be done, using Chainlink oracles to just simply extract and get you a market settlement for when you close your position, say on that DOGE market.
Yeah, makes a lot of sense. So, like, if you're thinking about this from a speculative perspective, if the overall market's trending upwards, but you kind of expect that, I don't know, Elon might have came out and implemented DOGE payments on Twitter or something like that, and you want to open a long, but you still want to maintain that ETH exposure as well, then that's kind of a good use case to go and put that into practice on V2.
Exactly right. It gives you that opportunity very clearly.
Nice, love that. So what happens with other tokens? Because now we've kind of isolated the market away from ever being able to list long tail assets on GLP. Like, how do you guys think about the process of new assets being onboarded? Is that going completely through governance as you'd kind of expect? Like, how are you guys kind of thinking about that?
Yeah, so again, I think that there's sort of there's a few layers to this. As a protocol, in time, any asset with appropriate oracles could be eventually permissionlessly listed on the platform. Today, from a risk standpoint for the protocol and from everyone there, that's being limited because there is definitely a lot of opportunity for there to be mistakes into the creation of a market, given that it's far more complex to create a GMX V2 market compared to, say, creating a Uniswap V2 market, which simply was a matter of drop 2 tokens in and a market gets created. There is obviously there is more technical overhead. So we definitely would look to see that as front ends develop, theoretically anybody in time will be able to create pools, have their own front ends, do that as they see. In the short term, we're just trying to take a bit of a curated approach until we're sure that both everything that's been built from the Oracle standpoint, can sufficiently support these markets, and also that I think there'll be some determination where if the DAO wants to incentivize any usage, how you may want to highlight pools that have incentives versus permissionlessly created pools which may not have, say, incentives or any support yet.
Yeah, that makes a lot of sense. So with because I know there's a lot of talk about kind of open interest and keeping that balance maintained, particularly with GLP. What changes happening with V2 to kind of align more LP incentives around that way? And is there any kind of incentives for traders on that side as well? It's like, just how is the open interest kind of balancing going to be kind of changed in V2?
Absolutely. So, and actually, it's interesting that you mentioned traders, because we are actually looking at finding ways to make sure that traders are that source for balancing the market by looking at ensuring that there's incentives in place for either directional traders or anybody who might be just simply looking at arbitraging to take up those opportunities when the markets are, let's say, significantly out of balance from an open interest standpoint. I think the design, by its nature, given that GM token holders are effectively the market makers for all these markets, and are definitely taking some amount of directional risk, is not to get to a 50-50 perfectly balanced market by any means. Is that as those markets shift, to a certain factor, let's say 40-60 and onwards, that there should be really strong mechanisms through both the price impact, both positive and negative, both disincentivizing creation of more and more positions that are pushing the pool sort of out of balance, and trading back and giving some of those incentives back to people who are bringing the pools back into balance is one aspect. And then the other one is funding rates. So compared to GMX V1, which really worked on a pure borrow rate model, and there is a certain borrow rate built into V2, but right now there's a strong incentive if you open a position that counters the let's say the prevailing open sentiment, then you would be able to earn a very strong funding rate that could well be materially higher than what somebody, say, doing the same thing on a centralized exchange might be able to earn keeping these positions open. So it sort of helps to create an efficiency of saying it could be GLP, but it could also be traders who help to balance, take this counterparty risk exposure by being willing to take that exposure. So effectively, slippage and funding rates are the two key mechanisms that have been implemented now.
Yeah, nice. That's makes a lot of sense, I think. And as soon as people put it into practice, I'm pretty sure there'll be a lot of people kind of benefiting from that and trying to make the markets as efficient as physically possible. Say if you opened or deposited into any of the GM pools, is that token, how kind of transferable and composable is that kind of representation token? Is there any kind of thoughts around that? Like, are you kind of seeing anything coming from external projects that might want to build off the back of GM pool tokens, or is it like transferable? Is it composable? Like, what's the dynamic of that token there?
Yeah, so the token is really just so I think there were certain psychological benefits of the GLP model in terms of, for example, the fee claim model, et cetera, that were very useful, but it definitely creates certain limitations in terms of its overall composability and usability within the broader DeFi ecosystem. Which, despite that, there's literally is hundreds of millions worth of GLP now, spread within the Arbitrum ecosystem into other protocols. But with that in mind, effectively the GM tokens have a few different benefits. They are effectively a straight ERC20 token. You can pick it up, transfer it between wallets. The fee generation happens in real time, literally, block by block. The value is being accrued into the token, and then recorded with each transaction. So there's nothing that you need to do separately that way. And which means that it's a really strong collateral token. It's a token which is continuing to accumulate value from trading fees, any net gains or losses from trader P&L, and the changes on the underlying assets, and those underlying assets being highly liquid tokens. So ETH and USDC are actually the primary tokens that back the vast majority of the market. In time, we might have other things like staked ETH, etc. But with those strong backing tokens that can be basically instantly redeemed, it's a highly liquid, yield-generating vault, which we see having a lot of usage within the DeFi ecosystem. We have brought on board Chaos Labs has been the risk manager who's been working with other contributors on a lot of the mechanisms and how we've built the vault from a safety and security standpoint. I think that's been a very big part of the thought process from a very early stage to make sure that GLP will be these GM tokens will be highly desirable collateral assets within other lending markets or other protocols. People, for example, with CDPs, like the way that GLP was used for minting an asset like MIM. So, I think that's definitely something that we kept in mind from very early on in the design, and the fact that I think we've tried to work with risk managers who are very well conversant with what the requirements of these protocols are for looking at a strong collateral asset. So that's definitely one aspect that we see coming into play.
I think there's a lot of alpha just following who Chaos Labs are working alongside. I mean, there's you guys and the Tapioca guys that we're very, very close to. So I love to kind of see that. Maybe one day we have GM pools on Tapioca. That would be a sight to behold.
Well, so, I will say this. I definitely feel like this has been a maturity that's sort of slowly coming into the market. It used to be that people would ask you before, so who is your auditor? That was all that people understood. You're now getting to conversations where people are saying, okay, and who's dealing with economic risk? Because no matter how, because there is a value of having people who are able to evaluate that and understand that they need to look at that risk. I mean, I think, and it continues to go on from there, further and further as we deal with issues around, seeing so many protocols who have suffered around OPSEC issues. Who's dealing with that? Who's administering your bug bounty program? We've really tried to put a real focus I will lament that for a protocol like GMX that literally was bootstrapped from nothing, and what was initially built did not have the benefit of all of the safety and security investments we can make today. It is regrettable because I think it is a bit of a blocker for new protocols to come up. But I'm quite hopeful that we're definitely trying to work with all these people that we're working with and trying to find ways so that we encourage them to work with smaller protocols, incentivize them to do so, because it's one of those things that everybody should have access to these tools if it's possible. Just have to figure out a model so that everybody else, not just the GMXs, have the benefit of using these services, and then also I'll also say it. Hopefully we also develop a market that rewards the patience that it takes to actually take the time to incorporate all of the recommendations and design improvements that all these people can recommend and provide.
Yeah, no, absolutely. So with let's say V1 hadn't happened and GMX V2 was like the start of all this. I can imagine there would be kind of, I don't know, some kind of incentive, maybe similar to something that you guys did with esGMX as incentives for GLP and GMX stakers. But is that something you guys are thinking about? Is there any other ways to kind of additionally incentivize people to use it? Do you think there's a large enough moat from V1 to kind of have that customer acquisition channel there? I mean, is there even incentives available from the GMX side? Like, how are you guys kind of thinking about that?
Okay, so consider the following: whatever I say now is strictly my own thoughts, because in the end, it's the DAO that controls the ability to sort of direct incentives towards V2. The DAO sort of everybody governance voted and decided to support and integrate V2 onto kind of the reference design front end, but there's a lot more that could be done to sort of stimulate that once I think a lot of the technical hurdles in terms of Chainlink's full integration and just being comfortable that the protocol has run for long enough play out. So from that standpoint, I think that I would definitely say that I think there is definitely tokens available to be able to support some level of incentives. Where and how those incentives should be targeted is definitely I think an important point of discussion, because there's obviously a need to both drive liquidity but also drive demand, and what type of demand. A lot of that is there. We talked about it kind of earlier in the call. We've always been very focused on the fact that GMX has only a very limited number of contributors, so a lot of the weight is to try to see how you can get people in the ecosystem, other builders, to really step up and build interesting products on top of GMX V2, and maybe have those incentives directed towards them, or working with them to co-incentivize their growth, which helps to build up the underlying growth of GMX, both from a trading and from a liquidity standpoint. So yeah, I mean, if you ask me, I would be very much pro looking at that. I think that conversation also further extends out into the chains that we operate on, and how the chains value the growth and the activity that GMX can provide as a sort of baked liquidity layer on those environments, both from a perp and a swap standpoint. So I think we're having all these discussions with this sort of ecosystem of partners that we're built. So you can say, Arbitrum and Avalanche, who we're built on top of, and the people who are building on top of us as well. And I definitely think you'll see incentive programs of some sort. But again, as I said, it's not my decision. That's really DAO will decide how they want to support that or not.
Yeah, makes an awful lot of sense. So with what's again, this is probably going to be down to the DAO, so probably from your own personal opinion. But what do you think is going to happen with V1? Is GLP going to be completely sunset? Is that just going to phase out? Is it always going to be there? Like, how are you personally thinking about it? And like, what are some of the other opinions in the camp?
Yeah, I mean, I think V1 has been a real beacon of growth and support within the ecosystems it's present in. So I mean, it's definitely not something that I could imagine is just turned off. But I think there's a certain point where if V2 delivers what it can, which is a far more robust trading environment, a trading environment that can leverage the liquidity that's within it even more effectively, I definitely think we would see capital move over to V2. And I think at an appropriate time, with appropriate notice. I mean, I think that I think governance would be wise to look and reflect on the fact that so many people have built on top of GLP that it's just a matter of giving adequate notice to try to nudge everybody over to V2, and maybe, as we said, work to incentivize and make sure the protocols and everybody else who are relying on GLP instead rely on the V2 markets, which we think will be a far better fit for almost every use case.
Mm-hmm. Could someone not kind of like technically replicate what GLP was doing, but using V2 kind of through some kind of actively managed vault? Would that not be possible?
No, I think people will, but again, it's a separate set of contracts. It's not something that if somebody has hard coded their support for GLP, they'd be able to use. But I definitely, as I said, I definitely think you're going to see a range of managed vaults for liquidity provision on V2. We definitely think it's a very interesting space. We think that the architecture works very well in terms of the assets that back them. I'll just give you an example. Well, like if you said, well, let's do something like that, but for Uniswap. Given that all markets have their own tokens and they don't have common collateral assets backing them, it's a little more difficult. So even as we make our markets, for example, it's more likely that somebody creates a vault but only supports markets that are, say, backed by ETH USDC, or a common set of collateral assets that are very easy and efficient to move between those different markets. But yeah, I think it's something that absolutely we'll see develop over time.
So with, I'm just going to go back to the kind of the Doge market. Obviously, the underlying is ETHUSD, and you can definitely see like a beta to ETH to Doge, so you can kind of see where that's derived from there. What, am I kind of getting ahead of myself here? If there was to be, I don't know, kind of non-crypto native assets being traded on the platform, whether that be equities, commodities, whatever you want to trade, would there be something available there? And how would the kind of correlation work off the back of that? Is that even possible at all?
Yeah, absolutely. So, I mean, the way to think about this is that those markets can be backed by theoretically any token, and it's just a matter of what tokens are appropriate to back those markets. For example, you could make a case that let's back some of these markets with, representative tokens for, again, a real world asset. So, for example, it's XAUG, which is Tether Gold. If you're building a gold market, maybe you're building other commodities. Maybe you still would say, hey, maybe gold could be a good proxy for a market for a silver or rhodium or other precious metals. And I think we'll continue to see various correlated assets where, if they're available, we can look at them. But even if we don't have a correlated assets and we only want to back a market with a stable coin, what's more important is making sure that you're creating markets that will be able to inherit the price discovery from external markets, so forex, commodities, markets that are so infinitely large in scale that it's not that what's happening on GMX is going to be moving those markets today. But being able to back those markets and do so in a way that we create the proper incentives for people to actively come in and take whatever price impact, funding rates are available to help come in and balance out those markets. And I think that as these markets mature in size, you will see that. We're already seeing it. The beta has a little over 20 million of liquidity in it. And I can tell you that, if I go look inside a wide variety of, let's say GMX-centric group chats, I'm seeing way more discussion about people saying, how can I pick up this funding rate opportunity? And they're trying to do it right now, and these are very on-chain people. I also know that from discussions with market makers and the like, they're looking at it and they're just waiting for the markets to scale to enough size that it's, again, a little bit worth the effort for them to be more actively involved. And they already know that there's going to be small are also filling those gaps. And once you get into even bigger real world assets, I think that becomes even more so the case that you're starting to address markets that are big enough in scale that could even support, leverage at these levels and higher, and create the right incentives to get other people to trade in these markets. And again, the market structures can vary. I mean, I view V2 as, it's an infrastructure for creating these markets, and the parameters for each of these markets will differ, right? Trading fees could be higher, they could be lower. Leverage as a multiple of as either a fraction or a multiple of the liquidity that's backing these markets can be established, all based on appropriate risk metrics. So, it's again, I think I may have even forgotten what the question was, but yeah, there's quite a bit of robustness in terms of the levers that can be utilized in any market, and not even all levers are being used today. But especially as you do start to get into these non-fully backed markets, I think more and more of those levers will be put in place, and risk management for just ensuring that there is efficient liquid markets is very important. And again, I think that's where moving away from GLP, which had a certain one size fits all, to a market to the new V2 markets, which allow for more granular support, I think is very important.
All right. So just to kind of wrap it up, there's a kind of adjacent question that I've just wanted to kind of ask and get some clarity around your thoughts around it. It seemed there's a recent Arbitrum forum post from yourself, and as I say, from the outside looking in, I completely agree with the whole premise of the post. I think a lot of, particularly DAO governance, can put sometimes unnecessary checks and hurdles in. It slows everything down, and when you're in such a fast-moving pace, kind of action is action above all else. Obviously, mitigating any risks associated with kind of quick action and things like that. But I'd just love to kind of pick your brain on where your head's at with the actual post and moving forward with Arbitrum.
Yeah, so I think, a little bit of history and context. GMX deployed on Arbitrum on effectively day one, the day the chain was open to the public for developers, the day it was available, and then as it became available to everybody else, almost 2 years ago. And we've been extremely blessed to build in that ecosystem. And I think we've also hopefully been meaningful contributors to that ecosystem. I think we used to laugh that in the early days, it felt like we were as much the BD operation of the chain as anyone else, because we were very keen to get more and more people building, and anybody who were building in the space to be building along with us, because we saw immense potential in what Off-Chain Labs had built in terms of Arbitrum as a real L2 environment, and an L2 environment that was both very stable, greatly eliminated MEV, created just an experience that we really thought showcased the best of what eventually the Ethereum ecosystem could continue to deliver, especially for DeFi. And it's been, I think, I think it's been a very successful, partnership or relationship, however you want to put it, for both GMX as it's grown with the Arbitrum community, and how the Arbitrum community has sort of embraced GMX, and GMX has helped bring people into that ecosystem. And there's just been a very janky transition from sort of DOT leadership to the DAO leadership, where, really, Off-Chain, or the people who created Arbitrum, really did hand the keys to the Lambo, to the DAO. They vested the DAO with over 4 billion tokens. They set them up with on-chain governance. All the pieces were put in place. The foundation was established to help provide a certain amount of support. And I think that I think rather than that being, for a lot of people, they maybe view that as the end of a process, but in reality, it was just the start. And I think that's where it's taken some time for everybody to understand that there is a lot of weight and responsibility if you step up to be a delegate and get the support of people at Arbitrum, as part of the Arbitrum DAO. And I think, my post was just sort of a reflection of a bit of aggravation that I felt that people were finding ways to sort of shun that responsibility because they were not sure how to handle that responsibility, and they instead were saying, well, can the foundation or can somebody else do this? Well, no, that's what you've signed up to do right now. Maybe right now you've maybe it involves more than you anticipated, but it's still what you at the moment signed up to do. And the Arbitrum DAO needs to step up to ensure that it invests in the growth and the momentum that this chain has built through both the community that's there, the protocols that have been deployed there, and all the work that's still being done and contributed to improving the tech stack. And there's just so many wonderful improvements still coming out that are going to continue to, separate, the Arbitrum tech stack from, I think, most EVM L2s. But there does need to be, I think, a little bit more action. And I'm actually quite heartened. I think I made that post about a little over a week ago, and there's definitely been a groundswell of support from builders, the ecosystem, and everybody else sort of reflecting and saying, yes, we have not been sort of taking up all the responsibility that we needed to. I'm a delegate, and even I probably in some ways didn't take up all the responsibilities I could have. And I've been really excited. There's been a lot of discussions, work groups that have started happening that are looking at trying to say, hey, how do we do a combination of things? How do we let people come in with single proposals right now? How do we invest in creating infrastructure to help support this and manage this in a better fashion, both in a midterm as we slowly develop it, and in a long term when it eventually can be handed off to some more targeted resources doing this. Kind of an all of the above approach. And it's no different than the way I think about how a protocol like GMX or in most DeFi protocols build. I mean, you start with, ideally, it would be wonderful if you had a fully complete, perfect product that never needs to be touched again, but that's just not simply where most things are. So you keep improving iteratively. You make mistakes quickly, but then you grow even faster, and you keep making better decisions, hopefully at an even better pace. And I'm hopeful that Arbitrum will recapture that sort of entrepreneurial spirit that really drove it in its early days, and it doesn't get sort of bogged down in too academic an approach or too becoming too risk averse. But that's kind of how I've been thinking about it. And I'm by the way, I am hopeful. I mean, I think, as I said, I think it's been a wonderful place to build. I mean, we've as you said, we talked about it earlier. I mean, GMX has succeeded because of this wonderful ecosystem of partners who we've been able to work with. We've helped them to grow. They've helped us to grow. And I'm just hopeful that we can reinforce that environment so that, the default where people say we're going to deploy is there, and it's hopefully where we are also, keep our primary base.
Yeah, absolutely. I couldn't agree more, to be honest, particularly with everything, how fast everything's moving, and even more so in particular in the L2 space. But yeah, it's we're backing you, and we believe what you've said to be true, and hopefully we kind of see that kind of get put into motion. So but yeah, I think that's it from my side. Is there anything else you want to kind of leave us with, or is there anything I haven't asked? It's been a bad interview, or do you think we've kind of covered a lot there?
Well, I'll just say I encourage anybody who's comfortable with the risk of using a new protocol to obviously, do your own research, but please do, if you get a chance and you do end up trying V2, please feel free to, give us feedback on Twitter, Telegram, Discord, any of our social channels. We're always very keen to hear feedback of how the protocol can continue to improve. And, all contributors are sort of focused on that, in just improving that experience. And, GMX has always been built for its community and by its community's input. So please don't stop providing that feedback.
All right, there you have it. Coinflip, thanks very much for your time, and everyone listening. Go and give it a whirl. It's I think you'll get your head around it quite quickly. But as I say, the resources are there and the people are there if you need it. And I'll speak to you all next time. Coinflip, thanks again. Appreciate it.
Thanks so much.